If you're looking for professional day trading education and high-level trade analysis and dissection, you, my friends, have come to the right place. My name is Pat Mitchell. I've been a professional day trader for the past 11 years, and I'm here to bring you exactly that, professional day trading education, all here for free on YouTube and on X. And tonight, we're going to be going over two specific trades. I'm going to go over exactly how I entered, how I exited, and whys and hows and everything else. I'll give you the full-blown trade plans, and I'm going to teach you my easy strategy all within the confines of this video. So stay tuned. So I hope you all had a wonderful day. Give me 1 sec. I'm going to fire up these charts. I know we definitely had a great day. Let's do this. Okay, so now that we are into the charts, let's go over today's action. So today we had a really big gap down. We gap down into support. You can see right into the area of support down here at this 558.84 level, and below the 50 SMA on the daily, which is interesting, and I'll cover that here in a minute. And then on SPY, we kind of gapped in between support and resistance. We had the trend and then the 20 SMA as resistance. And then our support zone was a low of range and this gap fill. So we did end up coming into the gap fill and we got our trigger, but there is a secondary trade opportunity or a potential for it to go lower. So you can't size into this trade right off the hop. Q's definitely a different story. Really, really nice on this one. So for those of you that are just joining me here, maybe this is the first time on the channel, these blue levels aren't placed after. They are placed prior to the market open. In fact, most of the time these levels, unless there's a big gap up or big gap down, are placed around this time every evening, and then it gets tweaked and refined in the morning. And then I design full-blown trade plans surrounding these levels with contingency plans in case that level wants to break and keep going. So all bases are covered. And I've been a huge advocate of preparation to no end, day in and day out, eternal consistency, as I like to call it, when it comes to preparation. Because if you don't and something strange happens, or maybe something catches you off guard, then you're caught off guard and you're not going to be able to trade properly at all. You're going to respond to emotion instead of responding to your training and your muscle memory. We discussed that in great detail today live on screen share. And I think it was a great conversation. I know a lot of the traders in the room got a lot out of it. And it's just really, really important. I can't stress it enough. So if you're someone that just kind of wakes up and follows alerts, or wakes up and just like, oh, looking at scanners and then flying by the seat of your pants on some bullshit setup, it ain't going to work, guys. That does not work. I'm telling you right now. And that's not, personal opinion or anything like that. That's over a decade of experience in the market. Preparation is absolutely key. This is the same as any other professional career path that you may relate to, something like a doctor or a teacher or a lawyer or a professional tradesman, journeyman tradesman. It is a professional career. And just like every career out there, there's good people that work that career, and then there's really shitty ones, right? Well, the difference here with day trading and trading in general, you can't just collect a paycheck. This is a results-based career. And this is why you need to cover all your bases and just prepare. I just cannot stress that enough. So let's go over these trades. First, let's start with, let's start with Qs. So actually, let's start with SPY. Sorry, guys. SPY was actually the bigger trade. I was going to leave that to the end, but SPY I triggered on it faster. So I'm going to move this over. So at the market open, and I'm going to zoom in a little bit so then you guys can really see this. So at the market open, we opened as it retraced from this volatile wash down. And this actually held the opening price of this day. So the very first level of support that it could find a bottom at, that's where it did. So that level is obviously important. One of the issues on this trade is that low there. It's important, like I just said. So we have to start in there. We can't wait perfectly for that gap fill. You have to go where the volume is. You have to go where the most recent action is. There's going to be a bias there for a lot of traders to get their orders prepared there. So you do need to start in there. And if you take a look at the price of that, it's roughly 436.50. And then the actual level is 635.50. So it's 1 point, right? It's essentially 1 point per share, which is fine on a big volatile day. But if it was a regular day where, it's not a big gap down or gap up, don't be starting in a point before your level. This is telling me I have to start in there. So as the market opened up, washed, as it came nice and close into that, I'm starting in. Now, my entries, or actually, I shouldn't say entries, more executions, the fills were not the greatest on the first two. And that was actually to be expected. Now, I didn't think they were going to be as bad as they were. But when you trade options, I don't trade options by watching an options chart. In fact, I don't consider myself an options trader at all. I'm a stock trader that executes via options. So I'm watching the stock chart, and 99 times out of 100, your entries will be absolutely beautiful and flawless. But on a day like today, with a big gap down, big volatile push down right at the open, the executions and fills might not be the best. So my first entry here at these blue triangles, you can see it was right about here on that secondary, right about here. So not the greatest. And I entered as it came right into that level. So it's just one of those things that then what you need to do is, because I prepare and I train, I wait for the right moment to correct that average right here, because I'm still over this support. I'm still safe on it. And these aren't huge ads, right? So on this, I correct that average, and then obviously it's consolidating for a few minutes. As it pops up, I am paying myself into the first level of resistance on the way up. And then as it comes up, I'm continuing to pay myself with my main target of this level. Now, I'm going to give you guys a little sidetrack. And I talked about this a little bit today, and I've always found it really, really interesting. Like I said, I've been doing this for 11 years, and I've always talked about my trades and posted my trades on social media. And the one thing I really find interesting is, through the years, I've been accused of photoshopping these trade entry charts. Now you can see the markets live. This is the actual chart here. And the reason why, I'll give you the reason why a lot of people will look at these charts and they'll see a literal bottom tick to a top tick and then no other sells there. What they're failing to realize is, if my target is hit, I am out. I don't hold anymore. What most people will say is, oh, you should always hold on to maximize your profit potential. All that regular basic bitch, like retail day trader bullshit that like doesn't have any bearing in reality. It has no basis in reality. It doesn't work that way. If you're a professional, you trade into targets. You enter into support or resistance, and then you ultimately are trading towards a goal, a target, and that's it. And once that target's hit, you get the fuck out. I don't ever allow greed to take over in my trading. And that's why it looks different sometimes than what you'll see out there. Like, if you constantly see someone that's holding and holding and holding and holding, and I don't care how big the position is, it doesn't matter. It's that size is absolutely irrelevant. What you're dealing with and who you're learning from is a fucking gambler that isn't trading as per strategy. They're giving into emotion and greed once that market opens. And you don't want to learn from someone like that. You want someone that is emotionally controlled and can take a trade from support into resistance, or for resistance into support, period. And that's it. And you're going to see a really interesting Basically, what I'm talking about here on cues, could I have held to here? No, I traded into my target. These levels aren't just my entries, they are my targets as well as another side of a trade, right? So if you miss the long, you can wait for the short and you would have capitalized in both. Qs, not a big trade, but it still would have been a trade. So really nice trade here on SPY. So, and you'll see another thing that you'll see a lot of on this channel is the exact same trade being taken on both charts. And that's one of the beautiful things about trading both SPY and Qs. And that's it. Both of those charts within tolerance, within reason, are going to trade exactly the same. They're going to find support at the same time and they're going to find resistance at the same time. So you can take those two positions. So that one trade now equals two profits, right? Like, do you understand what I'm saying? And that's one of the beautiful things about day trading SPY and Qs, and that's it. So now Qs was really nice here this morning, but as I said earlier, right here, let me get this right here. Right there is the 50. So we opened below the 50 SMA. So this top yellow level is the 50. That's right here on the daily, right in there. Okay. So we're opening below resistance. So you need to really wait for the wider level. That's why I'm not starting in at pre-market lows on Qs, because as well as risk. Like pre-market lows is at 550.65. Your level is 558.84. It's way too wide, right? So like SPY, I was able to start in here, right? Qs, you can't do that. Okay. That's breaking your rules. It's outside of risk parameters. So what you do instead is you need to allow it to come down nice and close into that level. And that came within about 50 cents of that level. So, and we are below that 50, and that's going to come into the equation here in a minute. So on Qs, and if you watched my video lesson that I just put out on YouTube on the videos section about the 3 chart patterns or why your chart patterns usually don't work. Now, what I talked about there is at lows, right? I'm going to be definitely looking for that long. Now, this isn't a higher low or a head and shoulders or inverse head and shoulders. There's no chart pattern here. This is a simple support trade, right? Taking the trade long into support. But what I want to point out here is this is right into support on the daily, and there's a lot of support there. There's a lot. So I know that I need to look for an opportunity to get my size in to apply pressure into the trade. That's how I say it. So my first execution is just an initial starter. Why? Because it hasn't tested the level yet. I'm expecting this to continue south, to continue down. So I can only get one entry there, and that's fine. That's okay. So as it comes up, I pay myself, right? But there is a very quick opportunity there, and you won't see it on the 1-minute chart. You needed to be there live, where basically what it did was it came down, it popped up, and it very quickly pulled back. So it gave me a secondary entry on a low risk entry, right? And that's what I did right there. So I applied my pressure right there and then simply worked it up. This has a very high odds success of it working, but I'm applying size in this trade that I wouldn't normally take. Now, that's not to run it all the way back up here or look for some wild target. What I do in this situation, because I have that 50, right? That 50 SMA on the dailies right in this area, right? So I know I need to make my money from here to here. It's a very small, tight window. But when we have a setup based off of our strategy that is high odds of it working, you need to use those odds to your advantage and you need to apply pressure into your trade. So by pressure, I mean size. You want to size in. You want to use more size than, not that you normally would. There's always a range of size, right? Now, when you're very new to trading, you're going to be, let's say you're trading shares. Your maximum position's 100 shares, let's say, or 1,000 shares if you're trading garbage penny stocks, whatever the fuck you're doing, right? Whatever that full size is, that is your maximum position, right? So we can't always be entering in with 100% of your maximum. If you're doing that, you're not reading the chart. You're simply just executing and hoping. You're not allowing odds to come in to really dictate the path, to help you navigate the market, to uh, minimize your risk in these situations, right? The only thing that we can control as traders is our risk. So in order to control risk, we size appropriately. All of these things are connected, and it's really, really important, guys. And it's one of those things that, as a new trader, you're simply just not going to think about. It takes years to develop, or maybe you're listening to a guy right now on fucking YouTube tell you that that's what you need to do. So that's what you need to do, right? So like I said, on this position, I know I only have a small window because that's the maximum. And the reason why that's the maximum is because it can come up and reject and fail. So I need to be out the majority of my position by then, which is exactly what I did. If you see as it comes up, I strip out all my size back into that 50. And sure, I'm still holding a few, but I also have my greedy target, which is this level. Did it go higher? Yep. Do I care? Absolutely fucking not. Don't care at all. That's my target. I enter into the level and trade maximally into that target. And that's it. So on SPY, I locked in $7,323. And on Qs, I locked in $7,273. Absolutely beautiful day. And one of the nice things about today was going over the traders in the room, and their entries were absolutely fantastic. Like, they're getting so good. It's refreshing to see when we have members that are really just like, it's clicking. You can tell it's clicking. Their entries that they're posting in the chat they're so nice. They're just beautiful. A lot of people will, like in my position that run a service, they'll screenshot people's P&Ls. I don't allow people to post P&L. I don't give a shit about P&L. What you make on the trade has no bearing whether or not that trade was well traded. Do you understand? It doesn't matter. And if you're someone that's listening to this and being like, oh, well, of course profits matter, you're missing the fucking point. Like, you have to ask yourself, does a heart surgeon go into every single surgery saying, boom, that's another 50 grand or 100 grand or whatever the fuck he gets paid? Do you know what I mean? Of course not. Does every time a professional pitcher in the MLB, every time he throws a pitch, saying that's another 20 grand? Like, it's such a stupid way of thinking, and you need to cut that shit out. So if you just got your panties in a knot because I called you stupid, then maybe it does apply to you. And maybe you need to take a look in the mirror and really change things, or else you're going to fucking fail, right? Like, there's a reason why I'm doing these videos day in and day out. I don't need to. I could be enjoying my life up here in the mountains of Costa Rica, man. Like, I could be doing that right now, but I want you guys to be able to have a chance at this, right? It's not guaranteed, right? A lot of people come in to my service, or the last question's like, well, how long until I'm consistent? I don't fucking know. Maybe you'll never be consistent. I don't know if you have it in you. I don't know, right? You might be a fucking person that is not coachable and doesn't listen and is constantly doing their own things and constantly fighting me. I don't know. Then that means never. You'll never be consistent, right? It's up to you. If you have a desire to push yourself into legitimate financial freedom, freedom that very few people on the planet get to achieve, then give it a go, right? So if you do want to learn how to come do this, come to tricktrades.com. And if not, you want to continue to follow along on the free stuff that's offered, That's great. There's 1,000 free videos for you on my YouTube channel. There's a lot of information there, guys, but you're going to have to piece that shit together yourself. It's going to take you a long time. So if you feel like you have all the time in the fucking world to get to your trading goals, by all means, continue on with the free shit. That's why it's there. But for ones that are serious about this, come to tricktrades.com. Okay, guys, I hope you all had a wonderful long weekend. I certainly did. And we're going to see you tomorrow. So have a great night, folks. Adios.